Good weekend, and what a week it was. I'm Ira Epstein with your financial market wrap-up, and I wanted to get this out. I know a lot of you are going to want to see it over the weekend. And today is Friday, and we are at June 10th, 2022. So we walk into CPI numbers. Now, in all fairness, I had written my clients in my full research package and said, treat this as though it's a major Federal Reserve report. Do not pay attention just like it's a normal CPI. It's got too much importance. The market was looking at it. Frankly, was inflation topping? They weren't looking for acceleration in any manner. I had heard numbers, you're going to get a 6% headline number, and that's down a little bit, and it's not going to be so bad. And I heard whisper numbers in the fives. Okay. Then we get behind that, the University of Michigan consumer confidence, which was a total collapse. The worst readings since they've been doing the survey. So we have the consumer confidence, I will label it this way, shot, S-H-O-T. Inflation, the idea that it has peaked, throw that out of your head. It might be peaking, but it hasn't peaked. That's the right way to say it. Energy prices got hit today. Everything got hit. Why? Because you had a mini panic going on in the stock market. You were down 800 points in the Dow. You're sitting here in the S&P down 117. This is what bear markets do. And I know a number of you write me, Ira, we're not in a bear market because of blah, blah, blah. And I write you back and read it. You'll see it on YouTube if that's the page you go to. And I go, you have your opinion. I said, when I look at all the stocks that are down 20%, 60%, DocuSign today getting hit monstrous, 25% in one day. I don't agree with you. It's that simple. You can pick out the few things. Now, there was a good performer today in gold, and I admit, I wasn't the guy that was able to catch it. Just the opposite. I had a tight stop on purchases in mini contracts earlier, and I'm talking the really small ones, okay? The 1/10 size didn't work. C'est la vie. Bonds and notes. You now got a 3.15 basic 10-year note. 3.2, challenging it again. But the weight was just on everything as the market was coming down. When we look at a monthly area chart of closes, so far for the month, we're only down 5%. I laugh at it, but it's true. Week before, let's get over here. The week before you were down, this is the 5.62. Then you were up a fraction, so that's 5%. But then you come here, you were down 8. Then you come over here, up 3. So I know your argument. You're going to go, well, Ira, look, from the peak, you were down 5.34. Then you're down a total of 8. You give back some, you're down 5. You add to that another 8.9, so you're at about 17%. You grab back a little bit for nothing, and now you drop down another 5. So I'm comfortable in the 20% range, okay, in the futures. I don't need 20 to know I'm in a bear market. I can look at it and know I'm in a bear market. It's really that simple. If you have to go by what everybody else says, forget it. Then when we look at the weekly area chart of closes, I'm not going to go through that exercise. You're knocking the lows right here. What else? Does this look to you like a market that's bullish? It doesn't, but I will share with you this. You had a couple of shots at rallies, and they just don't work. That's typical of bear markets. The swing line has got lower highs, lower lows. That's bearish. You'd have to take out now to negate the downtrend 42.02 and a quarter. I was listening to commentary today about the 3,400, 3,350 as objectives in some traders. I know where they're picking it up. They're picking up at least the 3,500 level from the 200-day average. I wasn't sure where they were picking up the 3,400 level, but I'm sure they have their own measurement tools. In terms of where the first support should be found this week if you drop any further into the 38.66 level. That is where I think the pros will do some short covering since you don't have an embedded reading. Okay? The battleground on the way back up is going to be what was the battleground earlier. Just take a look. Let me walk you through this. you can see how the market was fighting here at what number? The 100-week average in green to the lower Bollinger Band. I was saying, and you heard me say it over and over, the most I'm looking for is a challenge of the 18-week averages, and I think the market from there will get a failure. And obviously, I wasn't off the money. You can see this right here. With this, it's a failure. So then we look at the Dow. Same thing. I'm looking at 31,297, another 140 points lower. The Bollinger Band, or wherever it hits it, that's where I think the first support's going to show up. Now, we have a Fed meeting, and that meeting's midweek. So what's the Fed going to do? I was thinking about it. Could they go to 75 basis points to get ahead of everything? Easily. But what message does that send? The Fed's our stability factor. They're not supposed to get shook. They can be wrong, but they don't get shook. I think if they went to the 75 basis right now, it acts like a shake sign. They've already said at the last meeting with Fed Chair Powell, 250 basis point hikes for June and July. To change because you had this number, I don't think they're going to do that. I just think the CPI, they'll say that's past data. And you did see it came down on the headline from 6.2 to 6. That's what I think they're going to say. So I think they're going to stay with the 50 basis points. I could, of course, be wrong. They're not going to a quarter. So are they going to go there? July, I don't know. They said this, and if they have a hot number again on CPI like the one they just had, no, I think they could then say, we waited, we see it, we should move now. That would not rile the market as much as going 75 basis points this coming week. That's my guess. I'm probably wrong, but that's my guess. In the NASDAQ on the weekly bar, downtrend, bearish crossover, the 18 under the 100, away you go to the downside. The Russell, lower highs, lower lows, bearish, big support. I'm using the word support, and I can't believe I'm saying it. But you see, you've got the 200-week average right in here and the lower Bollinger Band. No, the way I teach it, traders are going to cover shorts down there. You heard me, cover shorts. And you have an outside week. You take out this week's high, and any of these charts, you're going to be questioning if you take out this week's high this coming week, what the heck is going on? None of them should do that. In the 30-year bond, still coming down. Are we going to retest this? Now, I keep hearing traders saying, if we really aren't going that much higher, I don't know what you're going to do on interest rates. The Fed's going to take them where the Fed's got to take them. The market today added, as you can see, big time to this market down, 2 and 17/30. 10-year down, not to the old lows, but you're back to a 315. Are you going to go over 3.2 this week? You could flash there. Got to look at it. Probably the safest trade, as I was looking at curve yield trades, is the 210. Buying the 2, selling the 10, looking for the inversion to happen again. It's my guess it was trading at about a 16-point discount. I think that was, I'm not a spread trader, but that's what I think the trade was looking like. In the dollar index, look, you got higher lows, you got higher highs, it's back into a bull mode. You had lost the embedded reading. Normally, when you lose the reading, you try to make a run for the 18-week average, but not, how do I say this that it makes sense to you? The dailies have the high percentage, the weeklies don't. The weeklies just tell you, hey, we should get some downward momentum. It doesn't set that target. If it happens, fine. My experience has been that's how to use it. The daily, when you lose an embedded reading, bullish or bearish, had you been bullish, you're coming down probably to the closest main moving average, and you do it fairly often. So I'm comfortable with that, but not on the weeklies. Now, if you go up any further off this report this week with the Fed and so on, 106.11, you don't have any big economic data coming out on Monday. Baker Hughes, I saw we added, I think, 6 rigs. It's nothing one way or the other. Lower and low, higher high in the euro. No trend. Is it going to head back to 103 level? I haven't heard the word parity being talked yet. We'll see. But these numbers we got today, don't underestimate them. These were hurtful numbers for the U.S. economy. The Canadian dollar, they get great jobs data. They're raising their interest rates. They can't stay out of harm's way. It's just that the U.S. currency is running over everything. You'd have to take out this week's high over the next 2 weeks to say, market got it wrong. It shouldn't have fallen like that. Right now, the trend is down. I expect a battle at the 18 and the 100-day average. If there's big follow-through, here's your targets. It's that simple. But there's nothing friendly here. And in the Japanese government, the government has finally taken notice. I'm laughing. They have driven their currency down, and they're saying maybe it's gotten too far. When a central bank says that, you want to be a bit cautious. That does not mean you can't go lower. It means I don't want to play. All right? You can't fight the central banks. You lose doing that. Bitcoin. Does it look to you like it's doing a good job? No. But it's also not falling like the NASDAQ is falling. So let's give it that little bit of credit. You have a potential bearish situation where the 18-week average is getting ready to cross underneath the 100. If you break down, these are your support zones, back to the 22,000 level and 26,385. The bears are in control, but it's not a trend down. You have a market that has an attempt at an uptrend, and if you take out 27,950, you got a real problem headed back down. Then the differential, excuse me, between Brent and WTI, well, as you can see on a weekly chart, about $1.34. Does this look like a market that's in trouble to you on the upside? It doesn't to me. Yet, during the day, I'm watching gasoline prices, and I got up to the bathroom 3 times and going, oh, my God, they're down 17 cents. How could that be? And then, of course, they came back and settled down 8. But you can see, you're bucking up where you're going to have your first problems at the 126.80 level on this rally. Each time you've gotten to the Bollinger Band, whether it's the first time it hits it or a little later, you do get the corrections from it. You've had that there. You had the same situation in WTI. And in gasoline, I might have hung in there just a little too long. I don't know. Clients are doing well, but it's still fully embedded. It's still bullish as can be. I see nothing here to get bearish on or to abandon long positions off of. So I want to be very clear. I may have to eat my words, and that's fine. As I said, I'm the Swiss cheese guy. I've been wrong plenty of times. My ego can handle it, but I remain fully into the bull side on those markets, and I think that's where you want to stay. Now, one of the things that I like is the ability to communicate with you in different ways. First off, here you're not hearing me tell you, go in and buy this, do that. You're not hearing me say, hey, I was wrong today. I am wrong. I was wrong in gold today, no question about it. I've been wrong this week on a few of the currencies. I was right in the cocoa, but overall it's been a good month of June so far. Don't get me wrong. I'm happy with that. But that's what I do in my twice daily written updates. And that's what I do in my morning subscriber video. What I love about the video is you get to see the chart setups with all the work that I have. I only show you here half to 2/3. Why? This is the enticement. That's where you go. It's really, each week, go to Starbucks. You've just bought my service for all practical purposes. Do you tip the barista? You've paid for my service for a week. Come on. Give it a try. Give it a coffee. You're going to get 24 videos a month. Your barista, go buy a Starbucks every day. What are you spending? Way more than what this is. So how do you find out about it and how do you work with it? It's simple. Go to our website at www.iraepstein.com under the word research. It's my name, iraepstein.com. Or just take your cursor at any point, move it up here, and away you go. Just click on the icon when you see it. That'll take you right where you have to be. So with that, I'm Ira. You have a great weekend. I, of course, need one. I've got my wine out already. I am having a drink because today's one of those days. If I didn't have gray hair, I'd have it already. Take care, everyone. See you come Monday.